Hi, Happy New Year to everyone. Last 2 years, 2020 and 2021, have been boom years for stock investors. Globally, stock markets rallied with the mother market US leading from the front. S&P 500 set record highs on 70 occasions, 70 days in 2021. Nifty delivered 15% returns in 2020 and 23% returns in 2021. The broader markets outperformed, with the Nifty mid-cap delivering 41% returns and Nifty small caps delivering 57% returns in 2021. After this impressive returns, market valuations are very high, going by all parameters of valuation like price earning multiple, price to book, dividend yield, market cap to GDP, all point to very high valuations. Therefore, it would be realistic to expect only modest returns in 2022. Also, 2022 is likely to be highly volatile, unlike 2021. So what are the triggers that can cause corrections in the market? There can be sharp corrections and very strong rebounds. So what are the likely triggers for corrections in 2022 rather? Apparently, there are two potential triggers. One is a more deadly variant, perhaps, of the COVID, of corona virus, a more deadly variant impacting normal life and economic activity that can prove to be very problematic for the markets. The second potential trigger for a correction is a rising interest rate scenario. The Fed is expected to raise rates by 75 basis points in 2022. 3 rate hikes of 25 basis points each. So that can lead to capital flight from emerging markets like India. Also, interest rates are rising everywhere, including in emerging markets. In India also, the central bank is expected to raise interest rates in 2022. A rising interest rate environment is not very favorable for stock markets. Of course, there have been years or periods during which interest rates rose and markets also rose. But since we are now trading at very high valuations, markets are vulnerable to corrections. So that is another potential trigger that can bring the markets down, that can cause a sharp correction. Now, apart from these two apparent triggers, potential triggers, there are some geopolitical issues which can cause turmoil in financial markets, particularly stock markets. A major concern is the Russia-Ukraine standoff that is emerging as a major tension area. Apart from that, there is the China-Taiwan border disputes issue, not border dispute. India-China border dispute is there. Taiwan-China standoff is there. All these are geopolitical tensions which can impact markets negatively. So the relevant question is, what should be the appropriate investment strategy in 2022? I said at the beginning that returns will be modest in 2022, likely to be modest in 2022. So the index level returns will certainly be modest. But then it is always possible to beat the index, to beat the market by focusing on investments in sectors which can beat the market. Every year, we know there will be some outperformers, some underperformers, and some laggards. So which are the potential outperformers in 2022? Let's very briefly look at some 4 or 5 segments. Number one in my opinion, is financials. Financials underperformed in 2021. Banks underperformed with only 12% return. Private sector banks, which were the darling of investors during 2015 to 2020, disappointed with just 3%, around 3% return. Actually, much of the underperformance was caused in the last quarter of 2021 when FIIs started selling relentlessly. Actually, now the situation has turned favorable for financials, particularly leading private sector banks and a couple of large PSU banks. The economy is staging a smart recovery. On top of the 9.5% GDP growth rate expected in financial year 22, another 7.5 to 8% GDP growth rate is possible in financial year 22-23. Credit demand is picking up. There are indications of capex revival. Banks' profitability is improving. NPAs are coming down and credit demand is improving. In this scenario, if FIIs stop selling, that alone can trigger a rally in financials. Therefore, investors should focus on financials, particularly the leading private sector banks, a couple of PSU banks, leading housing finance companies, and the leading fintech company for investment in 2022. The second segment is IT. IT is the undisputed leader of this rally with 60% returns in 2021. Digitization is in fast forward mode globally, and IT companies are now seeing robust demand. It is in a seller's market right now. So there is a multi-year upcycle for the IT segment. Therefore, it makes sense to remain invested in IT. But then investors should focus on the large cap IT and diminish their exposure to mid cap IT, because mid caps are valued exorbitantly at a premium to large caps. Very high valuations, whereas the valuations, though high in large caps, relatively valuations are more attractive in large caps. So this is one segment in which investment should continue and can be considered afresh. The third segment is telecom. Data consumption is exploding at a very fast pace, and 5G rollout is imminent. We know that telecom is now a duopoly, and the industry, which has been going through cutthroat competition, has decided to end the cutthroat competition. The leading players have revised the tariffs very impressively during the last couple of months. So all this augur well for the telecom industry and the two large players in the segment. Another segment is construction. Very low interest rates, historically low interest rates, have become a major tailwind for the construction segment, particularly in segments like affordable housing. There is huge demand. So all segments related to the construction sector, like cement, paints, adhesives, sanitary ware, tiles, all construction related segments are likely to do well in the coming year. Another area is export oriented industries. Globally, international trade is picking up, and Indian exports also are doing very well. So there are some segments where India is, apart from IT, globally competitive, and these segments, particularly pharmaceuticals, specialty chemicals, and textiles, have the potential to do very well in 2022. So these are the areas where investments have the potential to outperform the market, the potential to beat the index level returns, beat the market. Also, investors should appreciate the fact that mutual funds have beaten their benchmark. The leading mutual funds and schemes are consistently beating their benchmarks. Therefore, continue SIPs in mutual funds, particularly continue with SIPs in mid and small cap funds and also flexi cap funds. Also, as a measure of abundant caution, when valuations are high, book some profits and move some money to fixed income. Particularly dynamic bond funds is one area where investors can focus in 2022. Also, move some money into gold, particularly gold ETFs, which are very liquid. When there is a market correction, gold ETFs can be easily sold and the proceeds can be invested in stocks which have become attractive as a result of market corrections. All the very best for the coming year, for the new year 2022. Thank you very much.